Let's connect with Nilesh Shah as well, who's joining in right now from Kotak AMC. Nilesh, good to have you on board. Do you think that this state election win by the BJP is really going to allay any market concerns that there had been when it comes to political risks?
So market was already discounting political continuity, and the state election results will reconfirm that. More importantly, there are other good news also. The GDP number came ahead of expectation. Oil prices are relatively stable despite production cuts. Indian economy and India Inc. both seems to be well poised for future. So it's combination of everything which is giving confidence to the market.
Sure. Nilesh, but does it also mean advantage BJP in 2024 general elections? And do you think the market will now start positioning itself as a precursor to what may happen in 2024?
Undoubtedly, market was already discounting continuity of government, and this reconfirmation gives added confidence to the market. Market will also be thinking that in the next term, there will be even bigger and bolder reforms. Reforms which will change the orbit of India's growth. Reforms which will ensure that India continues to maintain on the path of fiscal prudence. For example, between subprime crisis in 2008 to COVID crisis in 2021-22, India is the only major economy which has reduced its debt to GDP ratio. Every other country in the world has increased their debt to GDP ratio. We have improved our debt to GDP ratio. There was a worry in the market that this freebies culture could destroy that fiscal prudence. But now there will be confidence and comfort that India will maintain path of fiscal prudence and yet accelerates its growth target.
Nilesh, what do you think then that this policy continuity spells out when it comes to appeal for foreign investors? Do you think that this is only, penciling in or cementing the fact that we will see more inflows into India?
So I think today for foreign investors, it's not the question whether they should be investing in India or not. I don't think so there is any foreign investor who doesn't want to invest in India. The question is at what price we should buy into India. Indian valuation continues to remain at premium to all the peers, be it China, be it Brazil, be it South Africa, be it Indonesia. And clearly their worry is valuation. My only submission to global investors, well, gold will always be available at the price of gold, and copper will always be available at the price of copper. Don't expect India to trade at copper valuation. You have to enter at the current valuation.
Sure. But Nilesh, what is it spelling into, or what would it equate into? And, leave the FI invest out for a while. Just the domestic churn which we've seen take place in the market, or the texture of the market right now, where some of the blue chips have underperformed and lagged, not quite participated in the rally as the mid and the small cap end of the market has done. Do you see a continuation of that trend? PSUs, defense, select banks, they continue to hold out? Or do you think now the lagging large caps will see a churn and they will make a comeback?
So the only worry for Indian market is that there is a segment of market, especially in stocks where floating stock is limited and is controlled by few investors. In those stocks, courtesy low floating stock, valuations have risen way above average. And that segment could be vulnerable. Now, it's always difficult to predict when the bubble will bust. And it is not yet even a bubble. My feeling is that there will be divestment in the next term. That supply will ensure that there is more floating stock in the market. And then valuations from being unreasonable will become reasonable. So if not in next 2-3 months, definitely over next 6 to 12 months, we will see low floating stock where supply emerges getting corrected on valuation. From a valuation point of view, there was selling by FPIs in large-scale names. There was profit booking by domestic investors in large-cap names. Now valuations are in favor of large caps. Hopefully over next 12, 18 months, they should outperform or give similar performance as small and mid-cap.
And just in terms of, sectors that you see benefiting the most from the outcome of the polls, would it be the more capex-oriented sectors, cyclical stocks perhaps benefiting?
So I don't think so. There is going to be any material policy change in next 6 months which can impact market from the state election outcomes. But undoubtedly, the focus of this government has been on infrastructure creation. This year, we will be crossing 10 lakh crore in capex for the first time. The infrastructure sector will continue to benefit ahead of general election as government pushes infrastructure sector. We will also see consumption sector benefiting as generally ahead of election, government puts money in the pockets of consumers. So infrastructure and consumer could be a play for general election 2024.
All right, Nilesh bhai, really appreciate your time. So glad you could join us.